Let's talk about cryptocurrency as an asset. If we're honest, most people now think of crypto as an investment. We don't really have that many conversations about crypto as money, at least not right now. I think that's coming, but most people now, when they think about crypto, they think about buying crypto for the price gains, kind of like you would buy a stock for the price gains. And so what we're going to do is think about this trend towards crypto as an investment, how people are thinking about using crypto in this way as part of their portfolio. If you watched the Super Bowl this year, you know that there were a ton of crypto ads trying to encourage people to simply buy crypto. So I teach a course on crypto. This course is on my personal website, lamontblack.com. You can go and check out that course and the different modules that are there. One thing you'll see is that when my students start the course, I encourage them to literally just buy crypto. There's no way to learn this without really just dipping your toes in the water, getting a feel for how this works, and owning some crypto for yourself. But should people be buying crypto? That's what a lot of people wrestle with, especially if you're in an older generation, maybe a baby boomer. You think of buy and hold investing. You think of, stock market, dollar cost averaging. All of these concepts from traditional investing are difficult to translate into crypto because, let's be honest, it's a risky speculative investment. There are certainly a lot of people who treat it as a get-rich-quick sort of scheme, and I don't think it has to be that. Now, granted, Bitcoin may not ever really be a store of value. The price volatility, some people feel like, doesn't make it a good form of money, but if you're into investing, you might actually be interested in that price volatility. Some of those exponential gains that we've seen over the last couple of years, that's exactly why people are looking to this as an investment. Now, to give you some historical context, I like to use the analogy of investing in the internet in the 1990s. So, I'm sure many of you are aware of this NASDAQ ETF, the QQQ. This is one of my personal holdings. Now, when people invest in the QQQ, they're buying tech stocks. And why do people invest in tech stocks? Because there's so much potential there for upside gains. Tech stocks are innovative, they're new, they're the future, and so people are buying into tech because they believe that these companies are going to transform the way we do business. But the tech stock sector actually got started with a bit of a black eye because you might recall back in the late 1990s, there was this huge run-up in tech shares that is now referred to as the dot-com bubble. And then in 2000, that bubble burst. And so you can kind of see that in the early part of this chart over here in 1999 and 2000. Now, does that mean that tech stocks are a bad idea? No. So there was a collapse in prices. They remained low for a number of years, but then you see through 2010 all the way to the present, you get this massive run-up in the NASDAQ index. So clearly the internet was an idea that people got maybe a little overexcited about, carried away with in the late 1990s. That came back to reality, but then it slowly built again over time. That's where I think many people are now looking to the crypto market and saying, could this be a similar pattern? If you think of the 1990s as the internet revolution, now we're kind of asking the question of, okay, is this the blockchain revolution? Crypto is built on blockchain. Blockchain is a technology that has huge potential to transform a lot of different industries, and crypto is that initial application that a lot of people are looking to as an investment. Now, crypto prices have also been all over the place. They are speculative. There's a lot of volatility. And so if you even just look at Bitcoin prices, you can see that Bitcoin, ever since its origin, has had these kind of spikes and then collapses. The biggest one that you might remember is late 2017, where Bitcoin prices rose up to 20,000. Again, it crashed shortly thereafter. That picture looks very similar to 1999, 2000 for the NASDAQ. But that doesn't necessarily mean that Bitcoin is a bad idea or that its value is going to zero. It went back down to lower levels. That's sometimes referred to as the crypto winter. But then, as I think the reason we're having this conversation are these huge price gains in 2000, 2020, 2020, 21. And all of this kind of upswing in prices that we saw during COVID, now there's many different explanations that are out there for that. It could be people simply being at home, they're getting stimulus checks, they're investing that money. It could be the massive monetary stimulus. Whatever the reasons are, when Bitcoin got to 69,000 in late 2021, that started to raise a lot of eyebrows. Now again, prices have come back down from there. We're back in the 45,000 range. But this kind of picture is why people are thinking about crypto as an investment, because there are these huge upside potential gains. Now, you might think this is a form of gambling, but investing is ultimately about trying to make money. And I don't encourage people to put all their money in crypto. It's not their core portfolio, but retail investors, institutional investors are now looking to crypto as an alternative investment. And if you read the news, there's now Bitcoin futures, there's Bitcoin ETFs, there's crypto ETFs. People are trying to figure out how do we convert these into more kind of standard products that people can use to invest in this market. And so if you want to understand crypto, you need to start thinking about crypto as an asset.